All right. Good afternoon, ladies and gentlemen. Before we get started, I'd like to invite those of you at the back there, please feel free. I think there's some empty spots here. Are these taken? So there's empty spots right here in what I call the prime real estate, the popcorn seats, if you will. So please feel free, if you're sitting right at the back, feel free to move forward and grab a seat and make yourselves right at home. You're going to get a really great vantage point of our two special guests joining me in a moment. And of course, if we have any more fresh arrivals, come on in and join us. Grab a seat. We are about to kick off today's event. All right, I think we're ready to get started. So ladies and gentlemen, before anything else, please give yourselves a huge, huge round of applause for joining us here today. Give yourselves a big hand, ladies and gentlemen. Apa khabar semua? Selamat Hari Raya Aidilfitri to our friends who are celebrating. And of course, very good afternoon. 各位贵宾大家上午好. My name is Nadia Heng, and I am thrilled to keep you all company as your MC today. In fact, today I have a double role. Not only am I going to be an audience member like yourselves, soaking in all this knowledge, but of course, I have the privilege of interviewing two very, very special guests. So welcome, ladies and gentlemen, to Building Your Finances, and of course, growing your finances through smart investing, hosted, of course, by Sime Darby Property. So let's give a big round of applause to Sime Darby Property for this amazing, fantastic initiative. And of course, joining me here today, I know if you're like me, there's probably many fanboys, fangirls in the house of our two special guests. So ladies and gentlemen, without further ado, please put your hands together to welcome our two heavyweights joining us here today. Let's give it up for Han Liu, the founder and director of Ringgit Plus. Come on up here, Han. Let's give a big round of applause. Woohoo! Thanks for joining us, Han. And also dressed extremely festive in his batik shirt, something that we're definitely not used to. Ladies and gentlemen, put your hands together for the one and only YouTuber, our real estate Sifu himself, Sean Tan, also known as iherng. Welcome, Sean. Welcome, welcome. I can see he's already still at work, still recording your audio. All right, wow. I gotta say, this is quite an exciting Saturday afternoon. Anyone who's on your social media, feel free to capture this so that your friends, your family at home also experience a bit of FOMO, okay? Well, ladies and gentlemen, it's an absolute pleasure and privilege. So before anything else, of course, we've got Han and Sean. Welcome, guys. How are you guys doing?
Festive. This shirt is going to get more attention than myself.
I rarely see him in the shirt, actually. I'm his big fan as well, so I'm equally fanboying here for you, Sean.
Ayo.
We're all fanboying, fangirling over each other right now. But yeah, thank you so much for joining us, gentlemen. You're both looking very suave, very cool. And I gotta say, before we get started, I would like to set a little bit of a backdrop for why we're here. You know, if you guys are following any of these two gentlemen on social media, or Sime Darby Property for that matter, the goal here today is really to gain some cool insight on how we can actually grow our finances, you know, build wealth through smart investing. And that is really looking at, hopefully these two gentlemen are going to be holding our hand to identify what are lucrative opportunities that are out there to navigate the market, and also to kind of share with us how to manage your investments for long-term success. But let's face it, right? And please, gentlemen, nod along if you agree. Nod along if you agree as well. I think social media today really fuels this idea that by the age of 30, you gotta have a big bungalow, you gotta be driving a nice luxury car, you gotta be traveling the world. But the reality is, building wealth takes time, am I right? It doesn't just happen overnight. So if you have a friend who tells you, I can help you get rich quick tomorrow, run in the opposite direction. Run in this direction instead. But that being said, of course, I want to do a quick survey, a quick temperature check in the room. How many of you here are below the age of 20? Show of hands. Anyone here below 20? Okay, just checking. I mean, you never know. There's some very, very motivated young individuals today. I know that follow both of you. Anyone here below the age of 30? Show of hands. I'm pretending I'm not actually below 30. Okay, not bad. Anyone north of 40? Show of hands. Okay, cool. All right, so I think we have a rough gauge here. So I think, Sean, Han, we've got an excellent crowd here. And before we jump into the questions that I have lined up for both of you, I'd like to remind all of you, we want to really soak in knowledge today. So if you guys have questions, you think of something, note it down on your phone. And at the end of the Q&A here, you guys, we're going to be walking around with microphones so you can direct your questions to any of these two wonderful gentlemen here. All good, guys? Perfect. All right, so let's jump right in. Okay, we've already set the backdrop. You know, growing wealth doesn't happen overnight. You need time, you need patience, and ultimately you need some smart investing strategies. So Han, I'm gonna go ahead and start off with you. You know, he's the founder, director of Ringgit Plus. First of all, elaborate a little bit more about what you do. I know you offer financial services, a wealth management. Tell us a little bit more about what you do and what are those main investment types that are actually out there?
Thanks for the introduction, Nadia. Afternoon, everyone. I'm Han. Just call me Han, it's fine. For the last kind of 10, 11 years, I've run a business called Ringgit Plus. I'm less day-to-day these days. Now I just sit on couches with very friendly people. But what Ringgit Plus does, for those of you who don't know, is that we are Malaysia's largest financial education and comparison web service. So you can come online, learn about your financial lifestyle, learn about how to manage your finances better. But also we allow access to products, right, from financial institutions like banks, insurance companies, and more recently, wealth companies. So another one of our services is financial planning. So what that means is a holistic view on how to manage your money better, how to protect your money better, and how to grow your money better. So a key aspect of that is investing, right? And we try to help our customers directly, one-on-one, and also through our education forums like Academy, to invest better towards a specific goal, whether it's retirement, whether it's children's education, whether it's financial freedom, whatever it may be. So one of the things that we talk about with investing is the number one thing is to differentiate between investment assets and investment wrappers. People confuse the two a lot, right? So when someone comes to me, some of you may come to me later and say, hey Han, are unit trusts good? And my statement to them is, actually, unit trust is just a wrapper, right? You can wrap anything in a unit trust, right? You can wrap stocks, you can wrap bonds, you can wrap even properties in a unit trust. Those things are called real estate investment trusts, right? So a unit trust is just a wrapper, right? Even EPF is a unit trust, actually, right? It comes in units. ASB is unit trust. Everything is unit trust, actually. It's just a wrapper. And being able to differentiate between wrappers and assets is one of the most important things that we try and teach people when it comes to investing. So, I mean, obviously lots more to talk about, but, small introduction and a little bit about what kind of investments there are out there.
Okay, cool. I think that's a very, very, I think you've already struck a very key point right there, which a lot of us, myself included for a long time, assumed the two were mutually, kind of the same thing, not realizing there's actually a distinction between assets and the wrappers themselves. Okay, so let me ask you a very fundamental question. When it comes to smart investing, what exactly does that look like? Because there's so much information online. There's an overwhelming amount of advice that you can really get out there. So from your expertise and experience, what does smart investing actually entail and look like?
A couple of things first. Just FYI, I am a licensed financial planner. I'm not going to do any financial planning today. It's impossible to do financial planning for a bunch of people. And I'm also more recently been licensed as an investment manager as well, fund manager, right? And what I'd say is investing is a very personal thing. There's no such thing as the best investment for everyone, or the best, in our case, the best credit card for everyone, the best loan for everyone. There's no such thing, right? It's very personal to you. And we use the word smart investing. I'll use the word smart back, right? Which is, when you're investing, you got to think smart as well, right? What does smart mean? You got to have, be very specific in investing, be very measurable in investing, what you want to get out of it, what returns, right? It must be attainable, so you can't say, hey, I want to invest in this whole building, right? So A. It must be, I forgot what the R is now. But the last one is T, which is it must be time-based, right? You cannot just say, I want to invest better You must have a goal and time in mind. So the building blocks of a smart investor is having those things, right? Having smart goals first, right? To figure out what you actually want. Because there's no such thing as the best investment for everyone, the smartest investment for everyone. It's very personal. So you got to think about yourself first in those kind of 5 aspects.
Sean, what about you? What's your take on a smart investment strategy? And just like Han mentioned, for different folks, different strokes. So in your opinion, what's yours?
Because we have a licensed guy here, so I gotta be watching out what I say. To me, is investing what I know best, right? So because diversification, they will tell you that it's safe, but diversification, it only applies if you don't know what you're doing. So you diversify, right? If I am in my own avenue, in my own domain, I really know what I do, and I do what I love, so it's easier to go. Yeah, so that's my take instead. Yeah.
No, I really like that because I was talking to Sean. I allowed to say this. I was talking to Sean just now before we started, and I asked him, "Hey, Sean, what's your investing strategy like? Because you are known as the property guy, right? Do you invest elsewhere?" He says, "Yeah, I invest a little bit elsewhere, but I'm like 90+% in property." And I really would not recommend this to everyone, right? Because he is the property guy, therefore he's highly invested in property. But we are not, I am not a property person, right? So I would not recommend that investing strategy for myself. So for him, being 90+% in property might be a smart thing to do, right? Because he knows it extremely well. He's investing exactly what he knows. But for the rest of us, sorry, I include myself in the rest of us, right? That may not be the case.
Don't friend you.
That may not be the case, right? So what I'd say is most of us have a career, have a job, have a business, right? And we're actually very invested in those things already. Now, when we're sitting here in this lovely room, we're thinking about property investment, right? And that's something that we may not necessarily be in, right? Similar to Sean, right? So that's where I would say 3 things, extra things to answer your question again about smart investing, other than those smart goals. 3 things I'd like to if you go away with nothing else about investing, just remember these 3 things, okay? Be diversified, think long term, and be consistent, right? Honestly, these 3 things, right, will get you rich, 100% get you rich, but get you rich slow, right? So
in due time, with patience.
Yeah. There's a lot of get-rich-quick schemes which might, with a very small chance, get you rich. But if you want the almost guaranteed way to get rich, those 3 things win the day. And obviously, we can talk more about what those 3 things mean: diversification, consistency, long term. We can talk about that, I guess, throughout the whole thing. But if you go out of this room and learn nothing else, just remember those 3 things.
Amazing. So being diversified, consistent, and really thinking long term. So long term meaning anything beyond, 5 years?
For me, anything under than 5 years is not really investing. It's either trading, gambling, or saving.
Okay, gotcha. I see many laughs in the room. So now you guys know what the definition of that long term should be. Let's kind of go back into this idea of assets. Of course, Sean, you're very heavily invested in property. Han, you mentioned, of course, that there are assets and there are wrappers. What are the different classes of assets that we should all know about in general, first of all?
So at Ringgit Plus, we try and teach people this kind of 4 asset theme, right? So we're not wrappers, right? We're talking about assets. There in the investing world, there are generally 4 types of assets, right? The first is equities, so stocks. You invest in businesses, they make money, you get some sort of return from them making money. There's bonds, which is almost like a loan to a business or a person. There's third thing, which is real assets. Real assets are things which are not pieces of paper. Stocks and bonds are actually just pieces of paper, and nowadays digital paper, right? But real assets are things which are not just paper. So property, gold, commodities. And the fourth is a catch-all term for everything else, and it's called alternatives. So usually alternatives are highly complex stuff like derivatives, more recently crypto, etc. So we generally tell people, look, like you've got to think about these four asset classes as different things that you can invest. Each of those things have different risk and reward potential, right? And it goes from kind of low risk, low reward bonds and real assets to high risk, high reward alternatives.
Okay, let's talk about risk tolerance. So looking at the room, majority of people here are in their 30s. So tell me, how do you assess someone's risk tolerance? And Sean, I want you to think about that as well, especially when it comes to property. Han, why don't you go first?
Traditionally, as a finance person or investment person, they usually only talk about two things, right? Which is number one, how old or young you are, right? If you're a young person, take more risk. Old people take less risk, kind of thing. And the second dimension is usually time horizon. Means not just your age, but how long do you have left to invest in? Is it a 5-year thing? So at the limit of that investing to gambling, trading style, or super long term, 20, 30 years, right? So it's kind of interrelated. But one of the things that a lot of people forget about is that investing can be a very personal, emotional decision, right? So some people just, even though they're young and they have a long time horizon to retirement or financial freedom or kids' education, whatever it may be, they just can't sleep at night knowing that they can have a significant capital loss, even though they might make it back after 10 years. I just cannot sleep at night. So that's the kind of thing.
Anyone like that?
That's the kind of thing that kind of those boring financial people, I don't know if there are any here, that they forget about. Is also a very personal, emotional thing to do, right? So one of the dimensions you need to add to risk tolerance is not just, time horizon plus your age, but also your personal tolerance towards risk.
Sean, what about you? What's your approach to risk tolerance?
Everything I got. So it's like, for those who have listened to my story before, I went through into a very dark time because if I got 100, I will invest 110, right? Because I'm willing to make back up by effort. Not encourageable at all. Follow him. Don't follow me. But that's the life that I am living. So I have zero enjoyment in lifestyle. Like almost everything is sponsored. Beside this one, also paid by my wife, so it's considered sponsored also. She insisted me to wear. Okay, you're not walking out the house if you don't wear that shirt. Okay. So that being said, also once you have family, that became different. So I am like just now I came because I cannot pay normal rate of lunch. I went to Family Mart and get rice. What you call that idea?
He's not the Starbucks kind of guy. He went to Family Mart and bought a bottle of
the bottle coffee. Yeah. So I am willing to stinge on everything else but go all in my investment. Because I am confident, because if I am also willing to die on my own sword. Meaning like if really Malaysia go kaboom, sorry lor, right? So that's me, because I want to win all or nothing. But crazy, right? Wow, no xiao all this flair. But as a licensed person, they cannot tell you that. That's why I got no license. So they will tell you like play safe, play or whatsoever. But to me, it's important that you really know what you have, what's the return. Because even in real estate, you want to play fast, play slow. There are ways to play. We all know how to get 10, 20 properties in. Or you want to get one a year, that's also crazy already. Or you'll get one every 5 years, do your work, right? So there's stages to any asset class. But what you want and what are you willing to sacrifice for? To me, all. Until I have Burrito and a wife, so cannot already.
Burrito is his little baby, just FYI. In case you guys don't already know that.
Yeah.
Who's not a baby anymore, by the way. He's like 2?
Yeah, 2. Yeah, 2 now.
So you have 2 extremes right here. One very, very traditional, or a lot playing a lot more safe. And then you have Sean, who's the other extreme, willing to sacrifice to go all in. So it just goes to show that everyone, it's a very personal choice and personal preference for your risk tolerance. Out of curiosity, how many of you are leaning more towards Han's view of tolerance? Show of hands. One person. Oh, okay. How many of you are leaning more towards Sean's appetite of risk?
Don't.
Oh,
Don't. Not encourage at all.
Maybe dial it in a little bit. And after today's session, you might, the ones that are more traditional might change their mind. The ones that are more risk takers might also end up dialing it down a bit. But that being said, I want to ask you, what are some of the common mistakes that you have seen people make when it comes to investing in property? And I know that you have had your own fair share of experiences. So what are some of those key lessons that you've learned and that you've seen people make that we should all know right here in this very room if we're going to go and invest in property, Sean?
The most entry level one is walking out of the showroom with a booking form, not knowing what they buy lah.
Not knowing what they buy. You
Yeah,
just
yeah.
pay okay,
Yeah.
I hope at the end of today, if you guys walk out with a booking form, you guys actually do the entire tour. It's all about making informed
Yeah.
decisions.
So a lot of times
Okay.
when you ask a lot of people why you buy, don't know what the sales girl looks hot, or the sales gallery, the ID is awesome, you know that you buy the unique or no ID one, right? So they say, oh, the logo very nice, I also don't understand why, but and the sad thing is they know nothing before they buy, but after they buy, only they start doing research. Then they come to me, hey Sean, what do you think of this property? You buy already, only ask me for what? Right? So that is the most common one, but we can laugh about it. But in Malaysia, property developers are in their A game, right, to make you walk out with a booking form. Right? So it's important to stay informed. Not saying that they are doing a bad job with it. They are presenting all infos in the most handsome way, right? So it's our own responsibility to do due diligence. Not saying that their products are bad, but that's why there's still a lot of sales, But then that's the thing that I think everybody should understand. And now we on info, and you have YouTube space, then you have me inside. Then I hope that curbs a little bit, right? And strumming my own strings, but yeah. So I think that's the most common one that I don't know how many people are property investors level already, or you are still in your first property purchase. So that's the different levels of mistake. Let's not go into if you have 20 properties, what mistake you make. It wouldn't make sense here. Yeah.
I think for the sake of everyone here, we'll do more fundamentals. Assuming it's your first, maybe second property. Maybe you already own a property. You're looking at an investment property, and of course, I think if you listen to Sean's podcast, you're not even exaggerating, because you hear people writing in with exactly these kind of nightmare problems where they've bought the property, they don't know what they buy, and then later on asking Sean for advice, which is a little bit too late. And I think that's a really good lesson to be learned, and a common mistake to really nip in the bud. If you're just sold on the ID, like you said, you don't get the ID with it. So it's important to be aware, and I think it's a testament to property developers in Malaysia doing a fantastic job at really showing you the potential of what their property is capable of offering. But it's important for us to know what is our needs, what are our requirements, are we buying it for our own stay or an investment, and then making that informed decision. Han, what are some of the common mistakes that you've seen when it comes to people trying to invest in any asset class for that matter, or balancing that portfolio? What are some of the mistakes?
I think a bit of that too. A bit of not knowing what I actually did. But the not knowing what I actually did comes from actually 2 or 3 things, right? The first thing that I see when people come to me and say, hey Han, I need some help with my investment portfolio. I thought I was doing correct, but then after the first few months it was fine, but since then it's just been downhill all the way. What am I doing wrong? How do I get financial freedom? I hear this really all the time, and I see the same mistakes being made all the time, right? Which is number 1, lack of diversification. You went all into something. Now, that in itself is not necessarily a problem, right? Because like I mentioned just now with Sean, he knows exactly what he's getting into. He knows what he's all in on, because that's his whole life, right? But that's not our whole life, right? Our whole life could be our job. I could be an accountant. I could be an engineer. I could be a teacher. I could be a very famous media person like Nadia. Property is not our life, right? But I went all into property and made mistake. Stocks, glove stock, not my life. But I went all into it, despite the glove stock employees were selling to you at the time because they knew what was happening, right? Stuff like that. So going all in, not diversifying, is one of the biggest mistakes I see people making. Number 2 is a bit like the Dono one, which is FOMO, fear of missing out. You just heard about it, you know nothing about it, but you follow a friend, a colleague, influencer. No, not you. But you followed someone into an investment without knowing, and then you regret it 6 months, 12 months later, because guess what? If you heard about it, third party, right, means you were not an insider, you were not in the business, which means you were probably late to the game. Right, FOMO is one of the biggest mistakes I see people make, especially in the last 2 years.
And just in case, I'm sure you all know what FOMO is, but it's a fear of missing out, just in case. Yeah, go on.
And then the last and more recent big mistakes that people are making is they did everything right. They diversified, they did their research, didn't FOMO, they went in, but at the first sign of trouble, they bailed, right? And they lost 20, 30% in markets, for example, the last year or so. Then they're like, okay, enough for me lah, I'm out. When actually, you should be feeling quite happy now. It's a bit like having stocks on sale, like having properties on sale. Not now lah, but maybe during COVID time. But when you've done your homework, your thesis is sound. You've been adequately diversified. When markets are down, is when you should be buying more, rather than buying less. Now, I'm not saying that for a single stock, buy all the way to the bottom and then bankrupt. I'm talking about once you're adequately diversified, you haven't made a mistake. You didn't FOMO in. You listen to an expert rather than a friend or whatever. But the last big mistake that people made was they bailed out when it's actually time to go in. It's the opposite of the first mistake, which is they bailed in when it was time to just be a bit more careful, right? So I think those three are the mistakes I see all the time.
And I think the same can be said even for property as well. I've seen this happen with friends who buy properties, and doesn't perform as well as they think. Then they sell it. They're so desperate to sell it, they sell it. And then after that, 5-10 years later, that property is worth so much more money. So I guess it's, which brings me to my next question for both of you. Does this apply to property and to other asset classes where whatever you invest, should you have this mentality, which I've heard people say before, that whatever you invest, it should be a number that you're willing to burn, or you're willing to, if you lose it, it's not going to compromise your current lifestyle. Is that a sound piece of advice that's floating out there, or is that completely wrong? Han?
Han, go first.
I'd like to talk about the property flipping stuff, right? If you need money from investment to live, i.e. pay for your groceries and stuff like that, that's not investing. That's you're trying to be a trader, trying to make income off trading, right? Which there are careers in trading, active traders in the market. If you want to do that, go ahead. Do a trading license, get some trading experience, and then be a full-time trader. No problem, right? If you needed your investment money to spend to live, that means you weren't really investing. You were actually you're actually trading. So just keep that in mind, right? And what I'd say is, I said it just now, if you're doing anything for less than 5 years, it's most likely you're either saving for something, which is fine, you're gambling, which is also fine, by the way. You just have to know that you are gambling. Or you are trading.
We're not advocating gambling.
No. As in, my point is like gambling is just a hobby for some people. I may not agree with it, some people, but the point is it's a hobby for some people, right? But just be aware that that's what you're doing. If you're doing something for less than 5 years, you're doing one of those three things. You're saving up for something. You should be saving in something very, very safe. You're gambling, which could be fun, good for you. Or you are likely trading. Means you're looking to trade, whether it's stocks, bonds, crypto, or flipping property, right? That's a trading behavior, not an investment behavior, right? So just keep that in mind. Like, it's okay to do those things, but don't call it investing. You're not investing.
Okay. Sean, what about you? What's your 2 cents?
Usually people look at market timing. They will say like 10 years ago, it's the time to buy. Now it's not. 20 years ago, last time you buy, and then don't need to work already one, right? Sean, why you still working? So silly, right? But a lot of people forget that we all have our own timing also. Let's say if I were to tell you, now is the golden time to buy. No money, cow. Give you my liver, man. Right? So that's the thing that nobody wants to talk about because it's not fancy. Like, if you are not ready in terms of your income level, your DSR bursts all the time, without even a property already bursts, right? On the iPhones, on the furniture, on the everything all installment, then it's very hard. A lot of people like to blame market first, but to me, it's not like I can control interest rate. Please come down, right? So, when timing also matters, but you need to match that with risk tolerance also. During MCO, for those who have followed the channel, once MCO, I'm on shopping spree already. I've been acquiring like several once MCO was announced. Yeah.
So during the pandemic itself, you were busy shopping for properties during that time.
So everyone, like, I go and print screen all the comment calling me silly one. It's still there in my PC. Go and screen cap all of them. I know all their names. And playing out, right? Now, like, interest rate is the main topic right now. Too high already, right? In 20 years' time, it's relevantly it's still low. And the low only happen when there's a pandemic. So when it's 1.7, did anyone buy or not? No ma, right? Because got pandemic ma, don't buy ma. But now when it's okay, did you buy or not? It's high ma compared to the lowest high ma. So we wait until when it's 12, is it? Because my aunt actually bought when interest rate is 12. And that time it's still cheap. Because property price cheaper lah. So with all those experience in mind, like timing in relevance, right? No matter how timely the market is, are you ready? Yeah, so I think that's why I do self DSR calculation like every month.
Every month. Oh,
Every
to be fair.
Every month feels a bit excessive, but okay,
Yeah.
that's not bad.
My 25 bucks only ma. So I will check my secret score. This credit card, don't want, cut off.
Hey, come to Ringgit Plus, we do much cheaper than that. Just kidding.
Straight away plug in. Not bad. I should work for you on it.
Great, seamless, shameless plug. Love it, guys.
Okay.
All right, so I love that. It's true, right? It's all, again, boils down to your personal appetite, your own timing, what are your current reserves, and how much you're willing to go all in, right? And what are some of the sacrifices you're willing to make along the way? Let's jump in as well specifically now. Now we're speaking about property, Sean. What are the different types of properties that are out there that are worth looking at for investing?
I follow the Monopoly game. Buy 4, then you can upgrade into hotel, which is commercial lah. So I follow that rule. But like now got don't know how many hotels yet. No, I don't have hotels yet lah. Okay, so how I wish. But my encouragement is to go residential first because it's governed. You got HDA, government keep looking at developers, and in 5 to 10 years time, developer very rare already. Because government keep imposing more requirements on developer to give more and more and more, right? Then the property price cannot go up, so they all need to eat the losses. Wow. They're going to be rare dinosaurs already. So appreciate them while we can. With residential, then you have higher leverage. And after going to UK, going to Singapore, right, I realized how fortunate we are. We all got 0 down, then some got cashback, right? So I didn't know that it became louder. But yeah, so these are perks in Malaysia only. I go to UK, minimum down 20%. Singapore minimum down 25 plus different tax. So my friends are investing at 34% down for 10 of his property. Wow. Then they ask me how I invest. And we still complaining. Right? So spoiled, really spoiled brats. Right? No, I'm calling me. Right? So with that in mind, but after residential, but do residential property investors make a lot of money? In 30 years time, definitely. But those who hardcore make a lot on, right, are commercial and industrial. But I also know 30% upfront, then if cannot rent out, right, wow, the installment 不是开玩笑, right? Sorry, you understand, right?
No joke.
No joke, right? Suddenly I don't know how to translate. Yeah, so I follow that game. And I encourage, because you got a 290% ma, use that first law. Last time got no limit. Last time, all you can buy as much as you can at 90% loan. Then you got DIBS. Who from the DIBS era? So developer interest bearing scheme. Don't need to pay interest throughout construction one. Then last time no DSR cap. Buy as much as you can. Wow, like a dream come true kind of situation, but people still don't buy. Then now when you got cooling measures, third property is 70%. Ayo, Sean, how to buy? At least you got still 290%, right?
And I'm going to assume that the way you're talking about the trend is that it's only going to get harder and harder, right?
Yeah.
Like the government's only going to make it harder and harder for you to acquire properties down the line.
Yeah.
Right. Okay.
So also like you have flippings. Just now he mentioned, I don't want to touch that because flippings, all governments don't like property flippers one, because it only cause trouble for the rakyat ma. All the property prices all kena goreng, all go up ma. So especially in Singapore, you talk about property flipping, right? They actually go against your media one. if you're on YouTube, I say, oh, go buy Singapore property, right? My YouTube will gonna climb on. That's why I won't talk about property flipping.
All right, speaking of property flipping though, now that you've brought it up, I'm curious, so when you know, because I think a lot of people also, when they think about investing in property, the fastest way to make their money would be through flipping, right? So how do you contrast the pros and cons between if you do buy with the plans to flip versus as a rental property? What is your take on that?
Timing. Last time, those days when there's no DIBS time, no cooling measures time, everybody was multi-million property investors, right? But all were flip. Now you buy, 4 years later you get the keys, right? You still lose money one. Right? Because all the rebates are discount, right? All inserted into your deal today. They are selling you future price already. So it's very hard to make money 4 years down the road. So don't even think about flipping. So in this scenario, it's smarter to play the long game, where you find a rental property where it can cover installment, then you hold it 10, 20 years, 30 years. For me, it's 30 years. Confirm 30 years. I won't sell my properties. Then in 30 years' time, even zero capital appreciation, the whole asset is paid for. So it's confirm win, but damn slow. Very, very slow. 30 years. So like retire already, still cannot earn money. So that's the sad game the sadder game to play, because it's very, 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 very slow. But when it's so slow, I can invest already, focus on my main job, and that's supposed to be investment. If not, you're an active trader, right? Pinjam his point a bit. So that's my take.
Yes.
Flipping only happens in commercial and industrial now, because like a corner lot you buy before construction, you get like 1 million, 2 million, right? But suddenly when the university come in, McDonald's come in, public bank come in, right? Whoa, then the property suddenly footfall a lot, then you can make a lot of money. We all pray for that to happen, no? But like Kota Kemuning, now it's so hot, right? The shop lots took 18 years to get tenanted. 18, meaning a kid go uni already, still haven't rented out.
So you're saying Port Dickson still got hope lah? I'm kidding.
Again, it depends where lor. It depends which part lor. And that's the sad part about real estate, especially commercial and industrial. Not like residential, it's pretty stable. You can, no matter how, it's still a home. But people, there's no need to rent a shop especially now online. Yeah, so that's the danger.
All right, so I'm going to backtrack just a tiny bit here. Show of hands, how many of you here, and only if you're comfortable, how many of you here are looking to purchase your first ever property, or have not actually made a purchase before? This is going to be your first ever. Okay, cool. So I think this is a valid question. I want to ask both of you
property
this.
Investor here.
Yeah,
about 20% only.
But I honestly think that's really great. So let's all learn from these two sifus right here. Han, what is your perspective on, let's say if you're a first-time home owner or buyer, you're really looking seriously at getting your first property. What are some of those considerations that you want our guests to go home with today?
Wow, a lot. I think pass to you better, property related. But I think in terms of
I'm gonna pass to both of you.
yeah, I think in terms of the how about this? In terms of the financial aspect, right? You started a career already, right? 1, 2, 3, 4, 5 years down the career, you have a fairly steady income. There are a few things you need to think about first before you just jump into property, right? Number one is, do you have enough saved up, right? Now, I know Sean's mentioned zero down, all that kind of stuff, but there's more to a property than just the down payment, right? So you got to make sure that your financial situation is sorted first, right? So what that means is, at Ringgit Plus, we always tell people, hey, look, number one thing you need to do before you think about investing, whether it's stocks, property, or crypto, or whatever, is to ensure that you have an emergency fund sorted, right? Now, this emergency fund can be it can be as little as 1,000 for true emergency, or it can be as much as 6 to 12 months of your current salary, just to tide you through in case something goes wrong. What you don't want to do is to buy your first property, all very happy, suddenly you, for whatever reason, you lose your job, and then you can't hold on to it. That is the most devastating thing I think can happen to a first-time buyer. So just make sure you take that out of the equation first. Settle your lifeboat first, your emergency fund. Second is, don't overstretch yourself. I know it can be very tempting. But whatever you're paying for your rental now should be a good benchmark, right? If you're renting now, there's a good benchmark. If you're not, you're staying with your parents, think about what you will spend if you're renting. Because first home, you're staying in your first home, it has to be commensurate with your current earning condition, right? You just buy a property thinking, hey, this is also investment. I should invest even more than I would do instead of me renting. I think that's kind of a big mistake that most people make. And then they come to me later and say, hey, Han, I'm 30 years old now. I have a property, but I'm just paying too much for it. Despite me, actually, I don't want to stay here. So for me, that's kind of a thing to remember. It is both a utility, you stay there, as well as an investment. It's not just an investment. All right, so that's kind of 2 or 3 things to think about.
Sean?
After you answer it, I think you answer it. but I think the point to make, like if you guys follow the channel, there's 2 modes of 2 intention for property buying: rental and own stay ma. But what if my resources are limited? Bo lui ma, brother, right? No money, how to do both, right? So a guide that I come up with is, if your installment, 85% of it can be covered by the 2 days rental, then you want to stay in it, right? With the mindset of 5 years later you want to exit. That's a very solid plan. Indirectly, you are using bank's money for free, meaning interest covered later lah, right? And assuming like 5 years later when you get the keys, it's still hot and fresh. But the mistake is renovation need money one. Credit card is not an emergency saving. A lot of people, I got emergency fund, my credit limit is 30,000. Okay. No. So how I wish so lah. But that's a common mistake that a lot of people finally noticing that renovation needs actual cash. Kitchen cabinet filler won't take credit card one. Not all. So have that in mind. Although, like you say, down payment don't need money, but once you get the keys, right, that's when real money burning process starts. MOT leh? A lot of MOT.
All right, those are just some of the considerations to keep in mind, guys. Let's also talk about, what about rental properties? So, those are, if you're, purchasing your first home. What if you want to now invest and purchase a rental unit? What are some of the things that you really need to evaluate before you buy? How do you evaluate whether it is a good investment?
The easiest way is to look into, of course, rental rates lah. But a lot of people being too obsessed with ROI. This residents got 7% ROI. This one got 4. That's why all go 7. But maybe the 4% one has a potential to it, which means like, let's talk about SJCC itself. I grew up here, right? I grew up in Toys and Strawberry Farm restaurant. Don't know who understand or not. That's like a dream come true for me. So imagine if a location like this, where there's a big plot of land next to an LRT that might be an office space, might be whatever, right? There's still room for uncertainty. There's still room for possibilities. Same word, uncertainty and possibility, right? It can turn the whole township around. If this one turns into for example, sewage treatment plant, then it will go the other way, right? But if they are a grade A office building, mixed integrated, whatever, right? Then it will go the other way instead. So with the current 4 or 5% compared to 7% confirmed kind of residents, right? That will have good, but capital growth for the next 30 years is the same price law. So that's also something to point into if you're looking for residential property. But now, why I'm not as concerned about interest rates, because I just learned also last year, I can write off my interest for my income. A lot of people also, what are you talking about? Right?
So would you care to elaborate a little bit more on that?
Sure.
Yeah.
Are from Ringgit Plus article also, I think.
So for investment properties, the cost of investment, you can think of it as a business, right? What I mean by that is tax is usually incurred on net income, right? Net after costs. So what is the cost of running an investment property? Things like having to fix things like the assessment rates, things like bank interest, because interest is a cost that can be deducted off revenue for a business. In your case, revenue is rental income. So it's your net rental income after all these things that's actually taxable rather than the gross. So that's kind of, you only learned that last year.
Yeah.
You are serious big time property, you save a lot of tax, no?
Last year only, only last year I learned that.
Oh, so before that
I buta give.
so all your all Subang children education all covered by you.
So now you guys know to make that
Thanks for the extra tax. One thing I wanted to add on the rental property thing is, as a holistic investor, right, it's important to think of, and I mentioned diversification just now, it's important to think of your own risk appetite and how you want to diversify. So how I look at it is, if you are you've got a highly risky portfolio already, and you're looking at property as a way to mitigate or diversify yourself, maybe you don't want a super high risk, what you call it, opportunity, possibility portfolio. You may not want that 4% with the probability of doubling up in 5 years, because maybe your equity portfolio, your crypto portfolio, your commodity portfolio, whatever it may be, already has that kind of inherent risk reward characteristic. Then you may want to go for that 7% ROI, because then that can be your anchor to the rest of your risky stuff, right? Conversely, if you are the kind where, well, I really only have EPF, maybe I have some FD, some EPF, I'm going up the risk ladder, right? I want to take a bit more risk and property is my way to do it. Then you might want to consider the second kind of property, which is the 4% ROI with that uncertainty / possibility of grade A office next door. So I look at it holistically, right? According to your own risk appetite, as well as your current risk in your current portfolio. If you are highly risky already, you want to take more risk, sure, go for it. If you're highly risky already, you got lots of risk, but you want to maybe diversify and anchor down less risk stuff, go for the 7% ROI. So that's kind of, I can't tell you what to do exactly per person, but like at least the kind of thought process is there lah. Think of your other assets, not just your property portfolio.
So that's basically how you should be balancing your property portfolio within your wider portfolio. Great advice. Gentlemen, I'm very curious as well. I'm sure you're all curious to know, how exactly should we take inflation into consideration when it comes to investing in any asset class? What are some of the things that we really need to keep at the back of our mind? Han, why don't you go first?
Inflation, very, very sensitive topic, because when I tell people, hey, inflation, you look at the stats lah, 2.5% average last 10 years, people say, crazy, Han, it's 100% more than 2.5%. And I think the best way to think about inflation is to think about not things getting more expensive. That's just one way to look at it. The main way to look at it is that there is more and more ringgit in Malaysia every year. Ringgit meaning the RM lah, right? And they are this amount of RM, and this is on Bank Negara stats one. It's called the M2, right? M2 is money supply, which means how much ringgit is there in circulation around. There's more and more ringgit chasing similar things lah. I mean, there's only limited things in Malaysia at any given time. It grows a little bit, yes, but the growth in ringgit is actually more. So therefore, more and more ringgit chasing less and less things versus the ringgit means that each thing costs more, right? Because it will be priced more because there's just more ringgit. And similarly, when you're thinking about inflation, you've got to think of your net return after inflation when you're investing, right? So if inflation is 2-3%, and by the way, there's no such thing as inflation for everyone. Just like investing, inflation is a very personal metric. I'll give you an example, right? If I say, hey, look, Han, a lot of my spending is a car, and I like to buy car, right? I like to buy TVs and cars. Those are my two favorite things I like to buy in my life. I like the best TV and the best car. Every 2 years, I change. Actually, my inflation rate is almost zero for the last 20 years. If you think about it, on average, cars have not gotten very much more expensive. Some cars have, some cars have not. Some cars actually come down. But on average, cars have not increased in value for the last 20 years. A classic example, in a middle class range of cars, should I say middle class? That's normal, right, to use. Entry-level BMW 20 years ago, 250,000 ringgit. Entry-level BMW today, probably 220,000 ringgit, right? So, as in, just by the example, there's a few more that I can use, right? Cars have not gotten very much more expensive. Likewise, TVs. 42-inch TV 20 years ago, how much can anyone tell me roughly? About 12,000 ringgit. Small, 42-inch only. Today you can get 65 inch TV, UHD, whatever, for like 3,000 ringgit. So for me, if I was, I'm not that person, by the way. I grab one, I don't drive one. My inflation will be almost zero, or in fact negative inflation for me. But for somebody who maybe likes to eat a lot, food enthusiasts,
Will look at me. Do the other side lah.
Food prices have gone quite insane over the last 20 years. I think most people have known this. And your inflation rate will be closer to 5 to 7% a year. Still sounds not a lot. It's actually a lot. If you compound over 20 years, 5 to 7% is 4 times more, right? So if you're an investor, you can look at your own personal inflation rate, and your future inflation rate too, because your spending might be different in 20 years' time. You might have children grow up, then you look at university education. Now you don't have to look. In 20 years, you're having to look at it. So you can look at that while you're considering your investments and deduct inflation from your investment amount, because that's what you will have to pay regardless. So that's how I would say. You're getting 7% a year, deduct 2, 3, 4, depending on your own inflation rate, and that's your net return.
Sean?
Why I love real estate? Because inflation is on my side. Simply as that, lah, right? For those who don't understand, maybe you can ask next door. No lah. Inflation means that price of things going higher, right? Because it's very funny always when I look into a lot of DMs. Like for those who know, I answer most of my DMs. Property price drop first, only I buy lah. How I wish, right? When land is only going to get less and less and less. Building materials is only going to go up. Like your salary at 3,000, tomorrow I tell you 2,005, you sure throw letter one, man, right? So it's never going to go down. So when everything is going up in price, right? How can we expect property will be the only thing that drop price? So with that logic in mind, that's why I'm super heavy on real estate. And when people complain about inflation, like, okay lah, fully lah, I admit lah, right? Like my chambing today at a kopitiam in Puchong, right, is 380 leh. Before I go UK was 320 leh. Like 2 weeks ago only leh.
I saw this post on your Instagram.
Yeah. So like, wow. One UK trip come back, I need to pay UK pound, meh? No lah. So with that in mind, right, I know when price of products are going up, right, I'm happy one, because I'm actually against it. So now rental will slowly reflect the new rates. Then and when you think about inflation the other way, if you take a lot of money, you owe the bank a lot of money today, right? The value is only going to get smaller. The other way lah. But some people cannot sleep when you have 3-5 million in debt lah, right? But I'm perfectly fine lah. I sleep too well lah. So because knowing that those money, right, is only going to get smaller. So why not loan more first? But again, not advisable lah, not licensed. Yeah.
Scary.
That's how I look at inflation.
Yeah. No, that's not a bad way to look at it. I mean, one more thing I need to add is, as long as you invest in things which track inflation or have some inflation component. So, classic example, how come people invest in stocks? Because actually, what are stocks? Stocks is not just some number that goes up and down. Stocks are businesses, and businesses, just like property developers, they need to make money. Right? How do they make money? When costs go up, what do? They increase price, right? So naturally, by investing in stocks, property, you are on the side, what do you call it? On the side of inflation. I like that. That's a good statement to use, right? So, and that's why it's very important to think about using real assets, using investment assets to basically defeat inflation, right? Be on the side of inflation rather than on the other side, which is, by the way, putting your money in a bank is like giving a loan to the bank, and therefore you're actually on the other side. The can sleep at night side, he's sleeping very well on your behalf. Means he sleep very well, and because he's taking money from you, who are putting money in the bank, and basically getting murdered by inflation. So just a few more things to add.
Yeah.
Fantastic. Well, I hope that as much as we have this negative connotation towards inflation, if you're investing in the right way, you will hopefully be on the right side of inflation, like both Han and Sean have mentioned. Well, we are here, of course, in this beautiful space of Subang Jaya. By the way, how many of you here grew up or have some connection to Subang Jaya? Show of hands. I'm curious. Ooh,
about half.
One third. Sean, obviously you have a connection to Subang.
Toys R Us only lah.
Toys R Us only, yeah. Okay, so actually me too. When I was growing up from Port Dickson, my aunt would take us to Subang. She used to live here. We used to go to Toys R Us in Subang Parade, right?
Yeah.
I love Subang. Han, any connection to Subang, by the way?
Was there
Subang Jaya?
Was there a Swenson's here last time?
There was, yeah.
So I remember I'm a Bangsa person. Sorry, I know Bangsa and Subang people.
But you know Swenson.
got some rivalry. But I used to come to Swenson's literally every weekend. Can't remember why though.
Must be a girl for sure.
Yeah. Also, my wife studied at Taylor, so that's why I have some connection there lah.
Cool. Well, I have to say, okay, so I mean, for those of you who grew up here or have a connection here, or if you've never been here, you're here today, right? I think one thing we can all agree, Subang Jaya has matured in the best way possible. Till today, Sean, I have friends who live here, you know, since they were kids, and they refuse to leave Subang Jaya to even go for Yamcha in Petaling Jaya, right? That's how much of a pull factor Subang Jaya has. But having said that, you know, I have to say, I personally, I studied here as well. I watch a lot of Sean's videos online. Now he's some high flyer who doesn't just cover Malaysia, goes to London, Singapore. But I have to say, you know, it's had a really, really big impact on me. That coupled with my staying here before gave me a lot of faith. And I actually bought a unit thanks to watching your Lot 15 video just down the road. Also a Sime Darby property project. But what I wanted to get at was, I'm obviously a firm believer in Subang Jaya. Sean, Han, I'd love to know, what is your take? Why do you think Subang Jaya has such a big pull factor? And for property investors, why do you think this is like a super hot spot?
Again, in my channel, I think for those who watch my channel before, forgive me, I will like repeating myself, right? But to me, I like to invest in locations that are already popular without MRT, without LRT. Right? Because a lot of people now want to invest in properties because they got LRT, because they got MRT. So they will think that this is going to hype out. But we have a lot of examples where those locations with such infrastructure don't work. Right? We all know which one. Don't say lah. Okay. But here, cannot. but in this location, this has always been a very popular location ever since it became an education hub. And the best part about education hub is young bloods. And after you all go into college, go in as a single, come out as a couple, they want to start a family, right? Or go back to the place where you study one. Or. It's very funny. And now, if looking into the buyer stats, a lot of audience who write in who buys Subang is also that category of people. And these are people in their early stage of career, early stage of family, so a lot of potential. And again, witnessing this location growing, until today still growing from a town to a bandar already. Now you have so many new highways. As if it's not popular enough, put in MRT some more. As if not LRT. As if not enough, you have more connections to highway. As if not jam enough some more, right? Put in more offices, more colleges. But if you think about the strategy of decentralizing, like now, not many people need to go KL anymore. Why? Because PJ is a hub, Mont Kiara is a hub, Subang Jaya is also a hub. And Subang Jaya and Petaling Jaya for KL people is the same. But why you laugh so loud? But for Subang people and PJ people, we all different, right? Our SS stands for different thing. With that in mind, I like this location because it has potential still. Like this stretch of land, like the land that we are sitting right now, right? Go a little bit of history. It was locked because Subang Airport was international. There was a building height you cannot build around here because it's along the flight path. Then people who stays around here, right, all complain to me the airplane sound cannot tahan and all the big jets, right, all very noisy and now no more. Then suddenly when that unlocked, this whole stretch of land right, becomes golden. Then you have new offices, you have LRTs again. Wow. Right? Too bad I got 2 kidneys only lah. Yeah, so that's how I look at Subang Jaya. And if you ask around, it's kind of like that blue, I cannot say blue label. It's a blue ribbon, sorry, not blue label, blue label is the drink. Blue ribbon location means that it's a very safe kind of location to invest in. Why safe? Not I say one, no, you Sean kena paid, right? Safe in terms of the rental rates, safe in terms of the people. If you go into SS15, go and eat, right? There's real life people, right? Not because Sean say, oh, come here and eat, ma. So with all those kind of real data, then you can see the demand of a space. Now if you go to Empire, right, like things are like free one, you know. Sometimes I go into Empire, I thought I'm very rich, right? No. I can't even cut hair for the past 5 days. No appointment. Oh.
It's full. It's
always
chock-a-block
packed,
full of people. It's true. It's true.
So that's my perception of Subang Jaya and why if I want to invest in this location, like you did, right? And you did because the rental can support and there's still room for capital appreciation.
Exactly. Yeah.
Yeah.
There's room for capital appreciation, and I have to say, my experience was a very good one. I got a tenant within like a couple of months, and I think it's just one of those things where over time I've only seen Subang Jaya continue to flourish, which leads me to this next question. Obviously, we all know, we can see the beautiful poster behind us as well, and I love your take on it. If you have not seen Sean's latest video on Teja, you should check it out. But what is your, give us your overall outlook for Teja, the latest development by Simdabi Property, Teja SJCC, Sean. Just a quick one, and by the way, we're going to throw the questions to you guys in a moment, or rather, we're going to open it up to you guys. So get ready with your questions. Our guys are going to go around with a mic shortly after this. But first, back of it to you, Sean.
How an easy answer, go watch the review, right? But I think the summary of it, the last statement of the video is it's nothing like, what's the word? There's nothing like, wow, about it. It's not like there's no longer swimming pool, there's no fanciest facade, there's no extravagant architecture. Yeah, so we have seen buildings with such things not working in KL or Mont Kiara, right? You all know which one. So with that, right, in comparison to the exciting township, why I admire a lot of this developer is their ability to own so much land in prime areas. Because all this includes holding cost one, right? Or the Chukai Tanah, right? Our unit, 900 square feet, Chukai Tanah cannot tahan already, right? They own how many thousand acres, right? So with that in mind, they have all these solid plans in place to make sure earlier phase buyers get protected. If this is a separate piece of land, whole different story, But if it's all controlled by one main player, and they have done this before, a lot of people forget that USJ was built by them. Too old already, right? But again, this new price point, back to inflation, right? All Subang, old birds, I call them old birds, very hard to accept. Because landed properties in SS19 back then, right? How much only? Now an apartment also cannot buy. Wow, cannot lah. But as a newcomer or you're a fresh person in the market, right? If not this price, where else can you buy? Then you start making your comparison. I don't want to say whether you should buy or not, right? But then you know what kind of position that you are in.
How does the price per square foot for Subang, or particularly Teja, compare with Bangsa and KL, for example?
KL is, okay, KLCC, right? Not KL. KLCC overpriced. KLCC now, the latest one, I think a lot of emails about it is the 300 over square feet one, right? Or 500 over 1,000 in KLCC, right? Don't buy now, my Airbnb focus, right? Oh, no, which one, right? Shh, don't say the name. It's 2,000 per square feet, right? But people play with ultimatum, right? And they play with the exit strategy, like so when you buy a property, it's best that you have strategies of how to rent it out. Yes, renting is the same thing, but who you rent to? Long term, short term, you buy room or you buy head. Here won't buy head, right? But so then with all this rental data, and whether or not I say how good, right? Please go check property portals on the room rentals around. Then look at the installment amount that the salesperson calculate for you. Then you know what I'm saying already, right? But again, it comes with a potential piece of land, which is the land that we are sitting on right now. Sorry, I'm not as excited with this one because I can't wait to see what's happening here. But if you are getting that as a residence, as an investment, right, this needs to be part of that conversation compared to a pocket land development. A pocket land development can only compete with you without any control of the surrounding. They inherit the surrounding. So if you see other addresses where it's all empty land owned by somebody else, wow, very dangerous. If my project do very well, they will copy exactly the same. Because the developer also know how to calculate one, right? Wow, that one they sell 600 per square feet or whatever, right? Or I'll just copy the same. Then you will have competition in terms of tenants in the future. Now it's all controlled by one player. Domination, right? And yeah, I talk too much already.
Which basically works in our favor, the long and short of it, right?
Yeah.
Okay, so I think we're running short of time. So what we're going to do right there is we're going to open the floor to questions. If you have a question, please put your hand up. We're going to come over to you with a microphone and feel free to go ahead and share. There's no such thing as a stupid question. If there's anything here that you don't understand so far, pick Sean and Han's brain, please, and we can all learn from it. Any questions so far from the floor? Oh, yeah, we've got a question. Brian, who I had the privilege of meeting earlier.
Oh, mic coming.
Gentleman here at the front, yeah.
Hi, good afternoon, Nadia. Good afternoon, everyone. Good afternoon, Sean. Thanks, and Hans. Fellow fanboy, fellow financial advisor. Thank you for all your wisdom today. I think you saved hundreds of thousands of dollars with all your wisdom today. So thank you very much. Not being sarcastic, by the way. So just three questions for Sean. Number one, given your wisdom and your strategy, next 10 years.
I sound so old, wisdom.
Does this mean that you won't even bother exploring UK properties?
Oh, wow.
Good question.
Wow. Thank you for following my social. I'm in the process of getting a Manchester property, in process. But I'm also in process of liquidating this and one kidney of mine.
By this, you're referring to your eyes, is it?
Yeah. So it's a very different dimension there altogether. Here is oversupply, right, in the newspaper. There is not enough house. But as much as not enough house, the down payments of 30% times 5.5. Right? So I'm in the stage where I'm just going to put a number like 400,000, right? 400,000 as a down payment, or 400,000 getting another 3 more properties in Malaysia. Right? So that's my balance right there. And this is like when I invest in Malaysia one, right? I don't even have to cough out. I need to prove that I have only.
So short answer is depends on our affordability.
Yes. So it's a game in UK, right? It's a game where I will encourage only if you finish playing Malaysia's game. If you have not maximized your 90%, haven't used the card of putting in a different financial institution, for those who follow, you understand. If not, please subscribe to my YouTube channel. Then also, if you have not played the use people's name, kind of all the cards that I teach people how to use, right? If you are not owned 5 to 6 yet, don't go UK. Because like it's all in on one that you don't know what's going to happen. Yeah, that's my take.
Second question, Sean. So Teja, I think you touched upon being very localized about distance to LRT.
Yeah.
Ideally 300 to 500 meters. So any comments about this one?
My own preference, I stay away from MRTs and LRTs.
No, talking from an investment standpoint.
Investment point of view. This is a close enough kind of distance, because I think I believe right? Not many Malaysians take train
Not true. I used to take the train every weekend.
You got 7 days, use 2 days only, big deal.
Actually, no. And it depends. If you live in Subang and you work in KL, that's actually not true. I used to take the train every day to work for 6 months.
Yeah.
So, just putting it out there.
Yeah, correct. So in terms of that, right, that depends on the tenant pool. Like as a own stay, right, you decide for yourself, right? When I invest, I stay away or a good enough distance. So at least I can grab there, right? But if it's for tenants, right, who are working in the location itself, like for properties, I like locations with high job opportunities. High job opportunities creates high temporary demand of space. Temporary here means 3 to 5 months. Why would you, like a lot of people ask me, why would somebody pay rental that higher than installment? Kuku one, right? Might as well own, because it's like I'm going to stay in Rasa Sayang Hotel for 1 night, right? Actually, the room is cheaper than per night rate. Do I own the hotel then? No, right? So it's the same concept. If they are here for 3 to 5 years because of a job, then they have no other choice but to rent at a higher rate than the installment, right? And here also I start seeing quite low already. I start seeing ang mohs already because of MNCs around. So a location, I look at it, right? Why there's a lot of preference of location where I share in the channel is all high job opportunities areas. That is a direct reflection and indicator of high demand of space. So for Teja itself, there's a potential, confirmed, because you can see a lot of people start work in Subang already. No longer everybody all go Jalan Ampang, everybody go Jalan Tun Razak together.
So short answer, potential opportunity is more important than distance to LRT. Right.
But it's good to have kind of thing, don't get me wrong. Like, because now, if you look into property ads, right, all same punchline one, strategic location. Whatever that means, right?
MRT enabled.
Yes! Everywhere the same one, right? But there's still a relevance of distance to KL. So like for me in Subang, right, like Teja, right, what attracts me more is the NPE, Kesas, and Federal Highway. That attracts me more than the LRT instead. Why aren't we talking about KTM? Same rule, because nobody kind of takes it anymore, right? But when your tenant do evaluation, right, if they are come here temporarily, then it matters to them. So again, the own stay and the investment point of view, right? So that's very important. Of course, if you compete to those that is within deeper parts of Subang, this LRT is a bonus point, no? When you compare, right? So you think of yourself as a tenant, A and B. A got LRT, but I don't take. But it's there, so I would prefer this one more, lo. If not, the rental same price, right? Which one I will take? I will take the one with, lo. But the one with will be at the same rent, won't, right? So yeah.
Thanks. One last question for Sean. So just now you said you're not very excited about Teja, but you're more excited about some sort of plot of land. What were you referring to?
In comparison to this piece of land.
The one we are on.
Yeah. So okay, it's biased because I've done township before. So in relation to township development, right? Plot A, B, C, D, like if you look into their earlier phases that has handover or performed, when I tell people, right, when they tell me, so this one fully sold, this one fully sold, this one fully sold, sure not, right? So it's true, it happened. Then the next data point is, are they rented out? Yes. How much are they rented out? Almost similar or more than the installment, provided 35 years, right? If you're 15 years, then sorry, invest early. Then at this, why I say I'm not as excited about Teja in comparison to the township, because the township, to me, in my perspective, right, if I am part of their team, I will be so excited with the potential of it. You're playing in a location where everything else is matured. Not like a lot of township that we look around, don't know nowhere one, right? So this one is a very different game plan altogether. And because of that, I'm very excited. And just think, like, if you're a developer, what would you build here next to the LRT? And Teja is walking distance from it. If this is going to be like another hub or another commercial whatever, they talk about it also, I'm so excited, right? And you are 5 minutes away, walking distance and not car. Yeah, so to me, it's exciting in that perspective, right? Not like Teja is boring, no. But boring also means good if you are a seasoned apartment dweller. A lot of people, if we think about apartment, right, must be the most, right? Then everybody in the AGM will argue about maintenance fee, one. Right? Like AGMs are all very toxic, man, right? This one who fix, do you want to fix? Then when everything is normal, it's standard, right? It's a blessing.
Thanks for your time. Han, sorry, you covered a lot of bases, so I have no questions for you.
Thank you so much, Brian. And I think I like what you say there, right, Sean? So basically, you know, in my opinion as well, Teja, it's not the most tallest, it doesn't have the longest swimming pool, but what it does offer you is that stability, that practicality, that affordable maintenance fee, and yet it is situated in a very exciting space with all, like you mentioned, this entire township is going to be thriving. Like, we've only just seen a glimpse into what it's going to offer, and that is going to have a direct impact on the value, on the traffic that you're going to find flocking to Teja, right? So overall, I think it's super duper exciting. Okay, we have time, I think, for one more question. One last question from the floor. Anybody? Show of hands. Raise your hand nice and high. Last chance to pick Han and Sean's brain. Although maybe if you're lucky, they may still stick around after this. I don't know. Anyone? Oh, yes, we do. Brave young lady with the glasses over here.
Mike man.
Yes, this beautiful young lady.
Hi, I'm Adeline. Thank you so much for sharing your insights on investment. I'm actually a potential first home buyer, looking for my first home with my husband here. So we have been looking for at a few locations, and we sort of like narrowed down to 3 places. But the one that we really liked is actually a pretty old condo in Taman Desa, and it's a leasehold. So what are your thoughts about getting? So it's mainly for own stay and investment for maybe the next 5 years. So what are your thoughts on getting like a leasehold? Yeah.
Thank you.
Teja is freehold, right?
And low density, by the way.
Yeah. No, I'm not saying. Wait, don't get me into trouble. So, if it's leasehold, personally, I'm very excited about the topic of leasehold because, hey, whatever lah, right? I don't want to be too politically correct. Penang has a lot of examples where the lease was renewed. And an example is the what place is that? The Jusco is in. Any Penang people here? The Jusco is at the Queens Bay. Queens Bay. I just went there. I forgot already. Queens Bay. Next to it, right, there's an old apartment with like 30 years left. Suddenly, the government allowed everybody to renew to 99. What happened to the project is everybody will vote for the government forever because they doubled their value. Of course, you will vote already, right? But in the same government, like in Malaysia, in KL, we have not seen any. The one closest is Kelana Putri in Kelana Jaya, left 30, 40 years left. So banks conventionally don't a lot of loan for properties below 60 years. So with that, right, your exit strategy is limited. But if there's an incident where this happened, they let everybody renew, everybody, suddenly double in their value, right? What's going to happen? Then, with that, sorry, she'll keep grabbing the mic.
Go on.
Then, like, if you think about valuation lower when the leasehold is 60, right? All landed properties in front of Sunway Pyramid, all those are leasehold properties. But if you tell me those are going to drop in value just because the title left 50 years, right? You believe me? I will buy, right? I'm looking for active sellers, So with that in mind, I'm not sure. But in your perspective is, as a own stay first, right? When do you need the house? Because this one is going to take 4 to 5 years. So you're married, right? Okay, just checking. Well, everybody, he asked this question. So because there are stories where they book the property together, 4 to 5 years later, right? They become 2 individuals. What? So that's one important. Like, a lot of people don't want to talk about it, but it's real. Then can you actually go for both? So if I'm you, I will go extreme one. I will look for a property where the renter can cover my installment, right? For my first, I take the SPA, go my EPF, withdraw out 10%, book here, if I like it, right? Then wait for 4 to 5 years. Meanwhile, look for something else. We have a lot of deals in my channel, right? Why stop at 2, right? Why stop at 3? Why stop at 1, right? But as own stay, then how comfortable are you with loan? To me, for own stay, young couple, no babies yet, right? Like if you hear baby around, if you're scared, then something wrong. I'm currently renting the place that I'm staying. Why? That frees up more DSR to own more. And it will be a very weird answer that you are looking for, Taman Desa or Subang Jaya. To me, it's because you like those areas. It's a romantic feel, right, that we have towards a location. We grow up. Cheras people will never move out of Cheras, man. But from externally, right, you all look at you all saw the condo project that I reviewed, right? Nightmare, right? They love it. So I'm in no position to comment where or who you stay at. Because it's closer to your family, it's closer to whoever, right? So it's an answer that only you know. But in terms of practicality, in terms of timeline when you have or whatever, right, only you can answer. But the confirmed answer is I will go to a location where the yield gives me high. If Taman Desa's current rental compared to their installment can cover and I still move in and stay, right, 5 years later confirm can rent out, right? Very good. Then I will go ahead, whether or not 60 years or not. Because these are a lot of people too scared of leasehold. If it's landed, it's a whole different story. But if this is a condo, I assume, I will go with that. I let yield tell me what to do, because it's not a dream home yet. We shouldn't be in a conversation of dream home yet. Until 45, then maybe dream home.
Check 1, 2. Oh, there we go. Okay, we're back. Okay, well, great advice. I hope that helps you. Adeline, right?
Yes. Thank you so much.
That being said, I do believe, looking out for Adrian here, if we have time for one more question, we'll try and squeeze it in, since I don't see Adrian anywhere.
Then let's go.
So do we have any do we have time for one more question? Oh, yeah, one more question. Okay, so go for it, guys. First person, put up your hand. We'll come to you with a microphone. Any question for Han or Sean, take advantage of this moment. Don't, otherwise you're going to be DMing them in Instagram afterwards. Let's all face the facts. So let's take advantage of it. Any questions? Yes, this gentleman over here in maroon. Thank you. And at the same time, we all untung lah kan?
What's up, brother?
All right, over to you.
A question for Sean as well. Since we're on the topic of leasehold versus freehold, right? How
Speak louder, bro. Speak louder.
Can you hear me now? Yeah, since we're on the topic of leasehold versus freehold, how would you differentiate the differences of a landed freehold versus leasehold compared to, a high rise?
Only on boundaries first. Okay. My first apartment in Puchong, accidentally I bought a freehold because right next to me, my neighbor is leasehold. Then accident one I didn't know also. It's going to be a price difference of 20% for an apartment. For a landed, right, it's going to be more than half, because ultimately we buy landed, right? But 没有比较就没有伤害. Again, I can translate, right? There's no comparison, then it's fine. When the whole zone is all leasehold, then it's all fine, all fair playing ground. Only when locations, right, where you have a freehold and leasehold split half, that's going to be a very big conversation piece. So like for landed, right, like if you want to compare like Damansara or Puchong, for example, one leasehold, one freehold, it's not a comparison of land tenure. It's a comparison of location, right? So it's a very hard comparison where you have landed, freehold and leasehold next to each other. Condo a lot, but landed very rare. But it's a very big conversational piece. Like if you buy landed, right? 顾名思义, like why I speak Mandarin today? the land title, right, is really a lot of component to the consideration. Yeah, so if can, of course, all of us want freehold, right? But the fact that no more freehold land, so that also proves when a lot of people say property price is going to drop, right? No more freehold land really. Now left leasehold only. That's why they say the dilute freehold, leasehold is okay one. But if you buy freehold also, there's a act in the National Land Code, compulsory acquisition. Whether you like it or not, I will buy off you. At least at market price. Singapore is 1965 price. So that itself, right, it means almost nothing. But a way to look at it, more importantly, tenure is like 30% of the consideration for a landed, 5% for a apartment consideration. That's how I think of it.
Thanks.
Thanks for coming, Ray.
All right. Well, thank you very much for your question. I think we will have to slowly wrap up today's session. But, ladies and gentlemen, I hope all of you have really gained, I've learned so much here today. I hope you've all gained a lot of insight. Thank you, Han, thank you, Sean, for unpacking this. Can we please give a big round of applause for both these gentlemen?
Thanks, guys. Thanks for coming, guys.
Well and truly, it's been an absolute privilege. And thank you to those of you who threw your questions our way. We really appreciate it. By the way, for your information, if you have not already been told this, Teja officially launches on the 20th of this month. I think we've already heard, it's a stone's throw away from Empire Shopping Gallery. It's, it's low density, and it's also very close to the LRT, KTM, if you're like me and you still take public transport. But that being said, before you leave, our team from Sime Darby Property is ever ready and delighted to take any questions that you guys might have. And of course, ladies and gentlemen, please finally, last but not least, give yourselves a big round of applause for showing up today. What a great Saturday. My name is Nadia Heng, signing off, and we all look forward to meeting up with you. If you're sticking around, let's continue to mingle and continue this conversation and continue to inform and keep educated and abreast with all things investment and property. Thank you so much, ladies and gentlemen. Have a great weekend. Take care and goodbye. Thank you.